Live. This is Jeff Mackey
Woohoo.
live. I'm Spencer Israel. That guy is Jeff Mackey. Jeff, they're telling me that mall stocks are the new chip stocks. Is that true?
There's been a rotation. It happened this morning.
Okay.
The XRT's on fire. People are flooding out of those tiresome chip stocks, taking their capital gains and pushing them into mall. Pretty much anything in the mall is exciting right now. Now I might be early on this trend, but I feel it in my bones. I feel like we're due.
Well, a happy mall earnings season to you too. About how many mall stocks are we going to hear from in the next week or so?
We got about 14 left. We heard from 4 this morning, loosely defined as mall stocks. I'm putting Kohl's in there, even though they're more of kind of a dumpster in Wisconsin type of company. Best Buy's in there, but we heard from Capri. They were not that great, to be honest. Bath Body Works also not that great, but low expectations helped them out. Dick's, which is an interesting store, we'll get into that, and Abercrombie, which is screaming like a scalded chimp. It's ridiculously higher. No one believed. No one except maybe I believed a little bit, but not that much. Anyway, but that's up 12% today, and that's better than a poke in the eye with a big sharp stick. Expectations were super low. These stocks have been absolutely murdered. If you look at that year-to-date performance,
I was gonna say,
it's not good. If you're down 40% year to date, you're falling out of the first story window anyway. And as we'll get to in some of these slides, they're no longer expensive. I mean, you take 40% out of a stock without a total fundamental collapse, it's going to start looking a little cheap. And we've got a lot of, on that basis anyway, cheap companies reporting this week.
I was gonna say that right-hand column, it kind of tells the whole story, doesn't it? Right?
It does. I wrote a letter for subscribers yesterday, and just kind of going through this. It's been just a savage year with a few outsized winners. What we've seen though and it's been a little bit of a turn. Walmart reported a perfectly cromulent quarter and has been poleaxed for like 6 days in a row, just destroyed. That makes me worried for Costco. The point of kind of going through all these earnings is not that I super care about Capri Holdings. I'm not just right on the border of cusp of buying that. It's that I want to try to see if I can interpret moves of similar companies as they report. If you walk through a mall, there's a lot of, a Venn diagram of mall stores is pretty close to a circle. So, and a lot of the stocks have behaved the same way. And as we're going to see these reports come in, the question is what kind of expectations were built in and what's that imply going forward? As you can see from the chart there, am I excited about Costco in light of what's happened to Walmart? Not really. It's even though it's off 10%, I'm just not sure what you say in an environment where people are so spooked on the consumer side that they're willing to believe almost any negative story out there, in the face of company after company is saying, you know what, the consumer's kind of fine. But that doesn't leave a lot of room for the expensive chains out there. Walmart being good enough, it was not good enough as far as the stock was concerned. Target, on the other hand, lower expectations, less kind of on the table. That bounced right off its uptrend and is back in the 130s today. So, we're seeing a recovery in places where the expectations were a little lower. I would put, or just they hadn't run out of control so much. I would put Dick's with a 3-year base kind of in that same kind of camp of companies that reported really pretty good quarters, pretty decent quarters, the kind you would expect. And that stock is lower today, but I think that's one that if were I inclined to be putting money to work in the dips, they're doing the right things. Foot Locker is a pain in their butt, but wasn't terrible.
Well, no one tied their hands and said you have to buy this company, right? It shows to buy Foot Locker.
They're out of growth for huge sporting goods stores, and so it's given their alternatives. The other thing they were going to do is they were basically going to make theme park type of stores and really blow out that entire "let's just play sports in our stores" experiment. I would argue Foot Locker is a better use of their money, and Foot Locker also is a place that you don't have to put people in ref shirts and only sell Nikes, which was basically Foot Locker's business model for years, and that turned out to be kind of a crappy one because no one wants to wear the Jordan shoes. They would have the Jordan clothing apparel kind of area in the back of the store, like it was this boutique that people really wanted to shop at, which was
Yeah.
insane. So Dick's is unwinding a lot of that. Now that's not an overnight process, but shoes, they cited basketball shoes are really strong. Women's basketball shoes are great. Nike's still waiting to make a Caitlin Clark shoe after 3 years, which is just bonkers considering she's probably the only female basketball player you and I can speak to their game knowingly. It's like, who doesn't like watching Caitlin Clark launch one from the logo and actually make it? That's an impressive feat of basketballing. Give her a shoe, Nike. You paid for her. But Dick's is they're doing what they can. They're cleaning out that inventory. They also refuse to blame anything on the consumer. They were just like, we know what you want us to say. Like it's everyone's kind of waiting for us to bag on the American consumer, but people are certainly buying an awful lot of baseball bats if they're that worried about the economy.
Does a company get like brownie points for pointing the finger at themselves versus pointing the finger at factors out of their control, like the weather or the consumer or the
Oh,
economy or the war or anything like that, right?
I want my companies to give zero craps about stuff outside of their four walls. And that doesn't mean that you want them completely blind, but the closer my retail CEO gets to acting like an economist, the more uncomfortable I am with those shares. There's not a chain on earth that can't perform better by improving themselves fundamentally, almost no matter what the environment is. Companies that blame the weather are a really good example. You know what? Sell more rain gear, dipshits. Like, shut up. Stop complaining about the rain. It's freaking get a little flexibility in your store model. And for the love of God, stop, sell galoshes if you're Foot Locker and you're worried about the weather. Stop complaining. There's always an opportunity.
Okay, so by and large, this Dick's report was okay, right?
Yeah, it was really good. You know what I mean? Is it gangbusters? No, but these stocks have been crushed. This is a 3-year chart of Dick's. It's done a lot of time, kind of not necessarily in the penalty box, but just sort of sitting there quietly executing, doing pretty well. The Foot Locker acquisition took a lot of kind of oomph out of the stock, but you know what? It deserved to. Again, everyone knows they bought Foot Locker. That wasn't breaking news. Them doing smart things with it is analogous to Target, as I said before. All you can have with these companies is we're executing, we're doing smart things. We're not promising you to change the world tomorrow. We're just doing it slowly on a store-by-store basis, and that's what they continue to do. It's an excellent story.
All right. What about this Abercrombie chart?
It's what's interesting here is Abercrombie and Lululemon, as of going into today, they were both down within a percentage point of 40% for the year. I love it when Wall Street treats pretty different companies as though they are exactly the same. And that's what we've seen with a lot of these mall stocks. It's Abercrombie is well managed. They have two different chains. They're trying to execute. They've got a lot of different stuff going on. Lulu has been largely lost. They've spent most of the last 3 years just kind of spinning in circles and giving away market share. Those are different stories. The market treats them with a correlation of about 0.9 in terms of the stock action. The multiples are super duper low, so they both make sense from just an acquisition standpoint. You can tell that from Abercrombie. They're buying back 450 gazillion shares. I mean, they're buying back a huge percent, 5% of the stock. They're going to repurchase. That's terrific. That gives me a nice little earnings boost. They're doing what they can. Sales in America are fine. Middle East sales not great, which that's an example of something that they can acknowledge without me dinging them for it. Because that makes sense to me. That you're not selling a lot of American T-shirts and the Strait of Hormuz areas. But
true, probably true. Yeah.
Probably makes sense. They're not knocking the cover off the ball, but at 10 times earnings, they were great. Lulu no one's expecting great things from when they report, but based off this price action that you see off Abercrombie today, up 10% on pretty good numbers, not terrific. They didn't raise anything, but it was a perfectly fine quarter. And you're seeing that stock have a nice move. I think you could see that from Lulu tomorrow. The interesting thing there is it's not really a turnaround story yet, but they've stopped just shooting themselves in the foot. We've talked before about Lulu's proxy fight with their founder, Chip Wilson.
Oh yeah, I saw they settled that.
they settled that, which is just why the hell wouldn't you before, right? Like if the guy who founded the company, who runs a sportswear company, who could or a sports company, an athletic company, who could actually just buy you out completely, maybe listen to him instead of just starting a public war and doing everything contrary to what he wants you to do. It's a 7 times forward PE company at this point. Um, if they get back, what Chip Wilson's main bone to pick with them is that they stop selling really good technical athletic performance gear and just wear. That was always kind of the best thing that Lulu did, right? They would send you, like, it was the place to buy athletic shorts, for instance. Best of that, just simply better than what you would buy elsewhere. Now, a lot of the competition has caught up, but Lulu's sort of stopped trying, and they've gone into things. Just if you flash back to the double headline I had there, they're selling nylon, kind of tennis suits. See that red, white, and blue one there? I'm not sure who convinced them to go big on that. I'm not sure who convinced them to put a brown backpack with that outfit, because that doesn't seem like something anything but a crazy guy who, I'm an accountant who likes tennis. I mean, what are they? Who's your target market with that down? But that is what it is like to walk into a Lulu now. It's just like we're just kind of spraying crap all over the place. If they can get refocused on, what, we just sell really good athletic apparel, you've got a lot of upside there. It's not a company that should be trading at 7 times earnings unless they're just in a locker of self abuse. Now, that said, they don't have a new CEO that starts until September. Weird decision making there, but I'm not expecting a great quarter. I'm also not expecting news that's going to shock anyone with that. I'm not expecting down 30% type of comps. And so when I see that Abercrombie price action, at least for a trade, the options are insanely expensive on all these. I think Abercrombie had like a 15-16% move priced into it. I was looking at Victoria's Secret's, another name of, another mall company that the stock hasn't done much of anything lately. They report coming up next week. I think they'll be pretty good with their new V Sexy ticker and their perfectly fine store base. Was in a Victoria's Secrets over the weekend. It's the vibe in those stores is so much improved. It's kind of, it just is a whole different place than it was as recently as 2-3 years ago. So they have their act together. You don't need terrific numbers when your stock hasn't done anything all year. Now, this was a more compelling chart the first time we showed it, which was like a week ago when I was in the 40s, but it still kind of works, and it's still an interesting idea. And that's what I'm getting out of the report so far. Again, a perfectly fine consumer represents a huge beat over the consumer we thought we'd have. And if gas prices continue to stabilize, not so bad.
A couple of questions going back to the Lulu for a second here. First off, whatever happened with that Costco lawsuit? Is that still going on?
That's not going on. Speaking of unforced errors, I mean, my God, the you know that disappeared. They are, I think,
Oh, it did? I didn't
settled
even
that.
know. Okay, it's gone. Great. And then my
Yeah,
second
they won't
question
get there.
was, since you mentioned that the new CEO starts in September, they're in a bit of a lame duck period right now. So I'm wondering if you're like Lululemon leadership, do you want to either A, like try to juice your numbers before the new CEO starts, or B, you want to get all the bad news out now before the new CEO starts? So one or the
I
other.
don't know if they have the luxury of deciding. I don't think they have a lot of good news to offset the bad at this point.
Okay.
The traffic's going to be a little meh, but again, that's expected. That's what people are kind of looking for, and that's priced into these shares. Somewhere along the line, from 500 down to $130, people noticed maybe momentum had slowed at the Lulu story, and it was time to move on. In terms of what I do think it does is it obviates the importance of the next couple quarters. When they announced that hiring of the CEO, the stock went lower for two reasons. One, it was just a weird hire from a company that Lulu spent 10 years kicking living crap out of when they were good. It's like it's you went to Nike, like, because if you throw up the chart of Nike, that's another one that looks a lot like Abercrombie and Fitch and Lulu. That's not one people believe in. So we took an executive from there, and we didn't pay her enough to just buy out the non-compete. Those are two weird things. Certain lack of urgency there that was troubling to investors. I think that that's going to be remedied rather quick with Chip's additions to the board.
So this is a Lulu is a company that is in turnaround watch mode, but not quite there yet. We'll have
Not
to
quite
wait and
there
wait
yet.
and see.
It's
Yeah.
if
Yeah.
you want to see a turnaround that actually you can, we mentioned them already, but if you go into a Target from week to week or at least month to month at this point, you can see an improved store. I don't know
Yeah.
that Lulu can do that just yet, but I also know that their numbers don't matter that much because again, you know, they were just a guy who just smashed his foot with a hammer every hour over and over again, and he stopped doing that. So it's like, you know what? I bet his foot is going to start feeling better. I'm willing to concede, there's going to be a certain level of bruising from the repeated foot hammering that he's been doing, but he's on the upswing. I think we've possibly bottomed in terms of physical harm that he's doing to himself, and that might be what's going on at Lulu. At least
All
that's the
right.
optimistic take on it. That's my belief.
If I can go back to that table for a second, then we have a couple questions in the chat. But
Sure.
what is the deal with just like all this year to date punishment? Is this just because nobody wants retail stocks? We all want AI. We all want space. We all want that, and nobody wants this.
No one wants really anything else. It's just been hard to get a lot of juice going from anything consumer facing.
Yeah.
You see it in where you would kind of find the speculative animals roaming elsewhere. IMAX being my primary example, and a name we've talked about before. But it's they're openly shopping themselves. That
Hmm.
should be good for some speculative mojo. It's gotten a little bit of a bump, but posting great numbers and putting yourselves up for sale and having no shortage of people who would be great strategic acquirers, that stock you would think would have a little more follow through than it has. Now it's been fine, but again, it's hard for any sector of the market to compete with the ramping that we have going on in the semi space. The other side of it is Q1 earnings don't typically matter all that much for the retailers,
True.
and it's the consumer turns out to be fine, but the smart thing to do is be conservative with guidance, under promise and outperform. That is going to be your best long-term way to run a company. It's just been really easy to believe the consumer's falling off the edge of a cliff type of stories when gas prices were ramping higher. We've seen a break. Brent crude is trading at like a several month low. That's super good. We could see a consolidation in gas prices, and it will be like it never happened. A lot like the tariffs. So I think you're setting up for a nice back half story in retail.
By the way, speaking of IMAX, I want to bring up this all time chart of IMAX here. If I told you that IMAX is going to get bought out at or near the all time high, you would probably say, "Hey, that's pretty freaking awesome." And yet, it doesn't feel awesome, right? Here's a stock that's gone nowhere, right, for over a decade now, where the all time high is for 44 was hit in 2015. So you've done nothing for 11 years. Yeah, we're knocking on the door right now. We're $6 away, but the headline there could be, this stock could get bought out for an all time high. It doesn't take. It's not that much. That's not that far away, and yet it's been dead money for all this time. So
It's and kind of credit to them for the persistence it took through a lot of bad time. What happened is the marketplace for them caught up to the current situation of the way we watch movies. Theaters
yeah,
aren't dead, Spencer. It's just that you're
no,
not going to get people to go into the old school ones where you don't have a pre-reserved seat. You're stepping through kind of a sticky floor. You
yeah,
got to share an armrest like with a guy like you're in the back of Spirit Airlines. That type of experience is in fact
yeah,
dead. No one's going to go to movies like that. But there's still a lot to be said. If freaking The Mandalorian and Grogu can do 115 million or
yeah,
whatever it did, I
100
mean,
million.
holy crap! Like it's there's still a place for people to go to theaters, just not bad ones. IMAX make licenses. They make the screens. They make kind of the big premieres. And if you're a company like Amazon, where you're gonna bankroll Project Hail Mary, the biggest movie of the year so far, you're going to make that movie. Is there anything in Amazon's history that would suggest that they don't want the entire pipeline? If they could figure out a way to buy Ryan Gosling himself, they would actually do that because they don't want Ryan to get any more money than he deserves to star in their movie. So of course they'd want to show it. It solves a problem of saying we're putting theaters out of business. No, we're not, and it enables them to make a lot more money by kind of riding these things out, showing movies in great kind of theater experiences. That's the only way you're going to get people off their couch. Otherwise, I'm just going to stay home and stream something.
When I was growing up, we had 3 theaters. We had the nice one, the mid-tier one, and the crappy one. And now the crappy one and the mid-tier one, they're long gone. The nice one is still kicking though. So, I guess that's just how things go.
I saw
Um,
if you would have put $10,000 in AMC at the peak, you would have almost not quite enough to go to one of their luxury theater offerings.
yeah.
It's you'd have $26, which I looked it up. The tickets are $28 now for kind of the luxury theater experience. So close. And that might be a trade that you'd be willing to make. But so AMC is probably not going to be a buyer of IMAX, but there's certainly a lot of other groups that could be.
Okay, so we had a question in the chat. Someone wants to hear what does Jeff think about the actual mall landlord stocks like Simon? Let's pull up the
Which is
chart.
that look at that. Look at it, just
This is a weekly. This is a long-term chart. Let's log this for a second. And then there we go.
it looks better than it did during COVID. You can see
Yeah.
the COVID 2020 lows.
Yeah.
It was
Um,
dark. It's a lot like what we just were talking about with theaters. You need a reason for people to get out of their house. And the idea that we all want to just be shut-ins and kind of never leave home, that's not true. So shopping is a social experience. When we hear from Dick's today, that's a classic example of a store that people go to. They're never going to get killed by Amazon because they do a ton of their business selling it to kids. So if you take a kid in and you're going to buy your kid shoes for baseball,
that's
you're not going
so
to guess. You're not going to buy 5 pairs on
that's so
Amazon and
true.
return 4 of them. You got to touch it. You got to feel it. It's tactile. And
Dude, I remember
that's a
I remember when the Knicks opened in when I was a kid, going there felt like going to like a freaking park because they had the
yeah.
track, they had the hoops, they had the golf. You could take practice swings with the little putting green. Like it was like a game. The store was like a game, right? It was
Right. And they do golf club fitting now. They bought Galaxy Golf and they wrote it down to almost nothing. And now it's become a reasonable profit center for them. Callaway's doing pretty well. These are things that you need to experience, you need to touch, and kind of all of shopping is like that, which returns us to Simon. They don't make the best malls. Westfield makes the best malls, but they make decent malls. And the idea that the mall would just die, I still get a lot of that anytime I talk about actually going shopping, and that's fine. But there's some stuff, if you're going to buy again your shoes online, Godspeed. I don't have really the patience to go in and try on 10 shoes at a Foot Locker, but I really don't have the patience to buy 10 pairs of shoes to see which ones fit and then mail 9 of them back. So I would rather just go and hang out and get myself an Orange Julius and cruise around the store and see what's what.
All right, here's another one from the chat. Thoughts? We talked about Target already. What about Deck? What about Deckers?
Yeah, pull it up, man. It's still recovering, putting in a nice base there. I think they're fine. They reported a really good quarter. Reported. I like on more, just because they have less things going on. But I'm sorry, I couldn't help it.
That was so dumb. I cannot believe I laughed at that.
Because it was awesome. Because I'm a font of wit. But that's a more pure play. They reported a really good quarter. Now the stock didn't run away. It didn't just go screaming higher. But even Dick said this morning, they said shoes are doing great. They cited basketball, but they said shoes are doing perfectly fine. Which was a little bit of a surprise because that gets to the higher end. Of the running shoe category. You can buy all kinds of different running shoes, including the $500 ankle breakers that Adidas just came out with. Do you see those, the little springy ones?
I heard about it.
Yeah. They just look like I can actually feel my ankles breaking with those. But in case I want to go run a marathon with pogo stick type of experience, I can do that. I can do it for $500, and people actually are. The markdowns at for the higher end Deck and at the Hoka and on themselves have been super low. They're still selling things at full price. Again, these are things that just don't happen when the consumer's feeling super strapped.
There was a question in the chat about any positions that Jeff is looking to accumulate, and I will answer that for you by dropping a link in the chat. If you want to see what is actually in Jeff's portfolio, use that link. If you give this page a quick refresh, I'm updating the link in the description. But yeah, if you use that link to find out what stocks Jeff actually owns in his portfolio, or also what options trades because he makes a new trade every week. He just made a new one today, actually. It may have been on one of the stocks that was discussed just in the last few minutes on the stream. You too can follow along and follow Jeff's trades and find out what he's buying, what he's selling, when he's buying it, when he's selling it. So use the link that I just dropped in the chat. That will take you to his portfolio. You can find out what he's buying, and there's more stuff in there, right? There's the earnings reactions, there's the report cards, right? There's, especially this time of year or this time of quarter. So
all kinds of stuff. Yeah, I sent out a note yesterday with kind of a brief preview. These are the ones that I care about most going into the the reporting that we have right now. This is kind of the densest, most tradable portion. We heard from the grown-up retailers, the Walmarts and the Targets and the Home Depots and stuff, the retailers for adults last week. Now we get to the mall where stuff gets a little grittier. Yeah, I see Macy's. It's got a couple questions, and actually that's just one from the persistent Jay Hampton.
Do you even care about Macy's? Do you care about Macy's at all? I don't think you do.
My first job after college was at Macy's. I went through the very exclusive Macy's management training program, which is now, I believe, a part-time job that pays minimum wage. But at the time, it was quite exclusive. It was a bridge to Stanford for me. But so yeah, I care about Macy's. I put shoes on men's feet at Macy's. That was a bleak experience. Listen, this is not a particularly good company. Berkshire just took a big position in them. I'm not sure how long that halo goes. They did. But it's also not a company that's going to do well if the malls are empty. The malls are not, in fact, empty. So on my visits to Macy's, they've actually kind of put some money into the stores. You can tell that. Again, that's the kind of thing that you got to look for. But when a department store is really struggling, if you look at Kohl's, as we showed it before, it's one of the lower run returns for the year. That's a chain that just doesn't put any money into the stores at all anymore. And you can see that chart doesn't really tell the story unless you squint and you see that at 90 was the high. And they turned that down because they didn't think that bid was sufficient for Kohl's, which is now $13. That's a chain where they're not putting money into the stores. Got that mold smell, Spencer. You don't want that mold smell. Macy's had that mold smell. The stores are much nicer now. I'm not sure where they fit in the world, like if they necessarily have a place for them, but I think they're doing fine. They are really good at kind of dressing up their book. And I think the Berkshire play is largely just real estate. At some point, Berkshire will help kind of nudge Macy's along into selling the office space. And then you end up with Bloomingdale's and Bluemercury, which are the two parts of Macy's that are doing better.
All right.
Jay shops at Macy's. So I bet he agrees. I bet he's seen the improvement in the stores himself, our questioner.
One of the reasons I love talking to you, Jeff, is because I always learn something new about a retailer every time we speak, even one as stodgy as Macy's. And I was wondering about that Berkshire buy was an interesting thing because you don't see that every day, right? You don't see Macy's.
No, you don't.
Filings. So
it's important to keep in mind too that Warren Buffett no longer really works at Berkshire.
That's right.
So I'm not sure if a mutual fund manager would have bought it, no one really would have cared. So
that's right. That's exactly right.
We'll see.
All right. You want to find out what Jeff owns in his portfolio? Use the link in the chat or below in the description. You can get his weekly options trades every single Wednesday. That's today. Jeff, we'll talk to you next week. I assume by looking at the calendar, we'll have a lot more earnings reports to discuss. And
I'll see you on the morning show tomorrow, I believe. So
we'll see you on the morning show tomorrow, 9 a.m. Eastern time. Jeff Mackey will join us. We'll see you there. Thanks a lot.
All right. Thanks, guys. See you tomorrow.